The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What is up, Octo Nation? It's Charlie. I'm going to be your host for today. Today we're taking a look at LGL Systems acquisitions. Ticker is DFNS. They are based out of Delaware. Can anyone tell me why companies are always setting up shop in Delaware in the United States? Let me know in the comments. The MERS is $125 million. Their target money MERS that they're looking for is $350 million to $1 billion company. At-risk capital, if they do not find anyone, they're going to lose $4.25 million. So they better find someone, right? They started out with a 24-month contract. You know me, I like it if they're shorter than that, the 18-monthers, because that means they're more aggressive or they already have a target definitively in mind. Regardless, 24 months is totally common, so it's totally fine. The units, DFNS.U, comes with one common and a half of a warrant. So I think those are cool. Those are kind of viable because you come with the half warrant. It doesn't come with a quarter or an eighth or a 16th or a ninth or anything less than that. So thank you for that. We appreciate that, LGL. Those are currently going for only $10.55 for the units. It's a pretty good deal. DFNS, which is the commons, those are going for $10.15. And DFNSW, the warrants, are going for $1.01. There is a crescent at $9.20, so that's cool also. They are looking at an aerospace and defense communications special purpose acquisition corporation. Right? The best defense is a good offense. That's their quote they're putting out. That's a George Washington quote from 1799. I like that. It's totally aggressive. Best defense is a good offense. They're looking for a long-term mission is to acquire a business that will serve as a platform to build a fully integrated provider of defense products and services defending the interests of the United States. The LGL believes there is a significant growth opportunity in the United States defense landscape due to the continued emphasis on modernization of the United States and its Western European allied nations that have invested in their respective militaries as the perceived threat diminished after the end of the Cold War. They've got C4ISR data processing, analytics, security, and dissemination with a broad range of applications across the aerospace, defense, and communication end markets will be a focus. So that's really cool. And we'll seek to effectively employ our management team's industry skills and experience as well as their extensive personal network to add substantial value. This is the first SPAC for the team. They have a massive 15-member team. A big member, Bob LaPenta, he was the head board member chairman. He was actually later removed. It was never, I couldn't find an official reason why, but as he was being investigated from another company by the SEC for calling sold goods shipped and done only after they were sold, AKA he was padding the books, kinda, for a different company. So the head guy was basically in for about, I think it was like 2 months. And on the first SEC filing, they even have a stip in there. They said, just to let you know, the head guy is getting investigated by the SEC. And just so everyone's aware of it, this is a separate company. He didn't know about it. Yeah. And he did fire the CFO, Chief Financial Officer of that company, but decided after about 2 months to step down to help the SPAC stay golden / clean. So that is sketchy. I mean, that's a negative connotation that some people are going to have with this. That head guy was also a big player for Lockheed Martin They're big, huge on defense, making anything from missile stuff to helicopter stuff to whatever in defense. All right. So he is actually out now. All right. His son is still in, though, which is cool. And then we still got 15 guys still in. So there was 16 originally. Now there's only 15. So this guy, John Mega, he is still in. He's got 40 years of operating experience in the defense sector. He found one of the founding members of L3, building and managing several divisions. He was a senior vice president and president of Communication Systems business segment at L3 until 2018. The division generated over $2.2 billion in revenue, representing 23% of L3's revenue in 2017. He's a COO and president of Microwave Group division of L3, vice president of Lockheed Martin Tactical Defense Systems. So this guy has worked for them. Group controller at Laurel Court and principal at Raytheon. Y'all heard of Raytheon too? So this guy is, his whole life he's been in the business. Now this is the head chairman guy. This is his son I was telling you about. This is Rob. Yeah, this is son Rob. He's got a 25-year career in finance, accounting, capital markets, and M&A. Co-founder of the Boundary Group, an investment firm focused on private investments in the aerospace, defense, and intelligence markets, and has recently partnered with Blackstone Group. He's a partner at Aston Capital, the Pinta family office, and has made several defense investments himself. Vice President in M&A and Corporate Strategy at L1, formerly ID, NYSE, ID ticker, including leading the $1.6 billion sale of L1, Managing Director of Co-Head Equity Trading at Bank of America Securities, and he's a CPA at Coopers & Lybrand. Okay, tons of finance, but still he's also got the the defense sector in his back belt. So his experience in the field and defense sector at one of the senior levels, and then on his experience with L3, according to the company's website, L3 says that it is a leading merchant supplier of intelligence, surveillance, and reconnaissance products, secure communication systems and products, avionics and ocean products, training products, microwave components and telemetry, instrumentation, space and wireless products. Among its customers, L3 Communications Holdings includes the Department of Defense, selected U.S. government intelligence agencies, aerospace prime contractors, and commercial telecommunications and wireless customers. So, as you can tell, deep rooted in a lot of this, right? A good friend of mine named Inspector Gadget is getting decently well known around the interwebs. He said, "I've got high hopes for this one. It would be a big deal if they can get a government contract for whatever they have planned." So I like that. They could take any sort of product or a little piece of a product or a middleman company that makes a piece of a product for some sort of defense, whatever. And these are the guys that could help that company. They could come in and help that company get bought out or somehow some sort of contract with like Lockheed Martin, because Lockheed Martin has got like government contracts for everything. So, if they can get a buy, hook them up with a buy from them for their buddies over there or whatever. There's a billion different ways this could play out. For speculation, I have no idea. It could be something big and awesome, that's going to blow stuff up. A new helicopter, maybe a space jet thingy. Who knows? Okay. They did bring up like the whole aerospace thing quite a bit, which I thought was cool. So who knows? They could get with a company that has some special coating that they put on metal that doesn't catch on fire, some sort of special fire retardant, something. This could go so many different ways, but I just thought this was kind of a cool niche for a SPAC that no one's really talking about, and just something to really pay attention to. But keep this in your back pocket about the head chairman of the Bob LaPinta guy, that he is now out. Again, this is still speculative of why he left, okay? I am guessing it's because of that, but I'm still looking into it, and it could be, this is another backdoor thing, it could be that he got out because the company they're looking to buy Bob could have interest in, right? So legally, like, you can't, because in the first SPAC filing, it says, we do not know who we're going to be joining forces with, or, any companies like that. And then kind of halfway through it, you're all like, dude, why don't we buy this company that you're already working for, Bob? He's like, that's a good idea. But I'd have to pull out, because then I'd have control, like, interest in it, and it doesn't look good. And so that could have been something too. So I could have been, overthinking this one. Maybe this isn't too big of a deal. To me, I look at this like, okay, it's not going to look for PR. Do I personally care about that? I do, but the way he was padding the books, it's not like he was straight up like lying and saying he had sales when he didn't. He actually did have sales. It's just that he was claiming those as fully gone and out the door and delivered, versus just getting the money. So he was getting sales, he'd get the money, and he was like, okay, I'm counting that this year as a sale. But he should have waited until the product was made, and then the product was then delivered to complete it as an actual full sale. So it's not like he was just like artificially just added an extra couple 3 zeros to his bank account or something like that. I don't think it was that. And again, he's claiming it was the CFO. So take that with what you will. Like I said, it could have been a side play regardless. So I hope y'all might have found some interest with that. I got some news I want to go over also with this. Today, FVAC, does that ring a bell? I did an emergency video, I think last Monday morning at like 4 a.m. Okay. These guys, this is a SPAC, and they announced that they are going to be hooking up with a miner out of California. And it is a defense miner. They have defense metals, and they're rare earth metals. The metals are stuff like neodymium magnets, like those super strong little magnets. Those are used in a lot of stuff like missiles and radar and all sorts of stuff for defense. So I thought it was cool that it coincided with this. So I think it was a good time to put this video out. Regardless, what am I getting at? So does the last name Chamath ring a bell to anyone? Can you let me know? What has Chamath done that's pretty famous with the SPAC community? Anyways, he's the pipe that backed this FVAC, okay? So he was actually the pipe money, the after money for this company. The backed rare earth miner. I did an emergency video on last Monday. Well, Uncle Chamath just gave us some love, so check this out. So this actually closed 15.35% up on the day at $2.94. Now, post-market, I'm going to show you a tweet that Chamath actually did. It made this thing go from $2.94 at close to $3.80 after market. And that was just when I checked it. I don't remember exactly when I checked it, but it's probably higher than that now. So it's gone up an extra. Today it went up 15%. After hours, it went up an extra 29% already. Okay, and it's probably going to, by tomorrow morning, who knows where it's going to be, because people are market ordering this thing and limit buying this morning. But oops, let's take a look at where this went. And you know what? Oh, there it is. Okay, so he just put out a tweet, and he basically said, hey, I was the pipe with this. I think you guys should check it out. I wrote up this article here. I want you to check it out. And what he did is he put, summary, rare earth metals are increasing critical, important, and electrification and national security issues with geopolitics. Long-term large supply constraints with no resilient vendor diversity, example, China, currently available. So what he's getting at there, a lot of these rare earths. So, okay, China's super smart with metals, okay? Every metal that is mined in China, the government owns the mining companies. Okay, total dictatorship, but smart for China. Okay, I think they're the only place that it's like that. Everywhere else, like, you can have some random company. USA, I don't even think we own one mine in America. We should, okay, but America doesn't, which is nuts. Like, for instance, America should actually buy FVAC. Okay, Trump should actually buy that and nationalize it. So what Chamath is getting at is China is smart. They go and buy all these like really weird minor plays like this one. This is something they would buy because China is smart and they want to own the rare earth metals, because they can use that to clutch on things like the United States. So we're putting our thumb on China's forehead. They could easily put their thumb on our forehead and say, oh, you need some neodymium magnets? Did you know that we're the only ones who have controlling interest over every neodymium mine in the world? Or there's another rare earth metal called cesium. We can get into all other metals later, but I mean, just kind of think of that. That's a big deal that this is not China owned yet. And there's only, I think, 1 or 2 other mines in the United States that are rare earths that China doesn't own. Okay. FVAC is the largest mine in the U.S., only mine in the Western Hemisphere, based in California. It is green and sustainable. I'm not sure how this mine is actually green and sustainable. They maybe have some solar panels, but I think it is actually a top fill mine. So they don't have to go underground that much. They can just kind of like backhoe it into the back of the tractors, throw it up the trough, and then just run it through the mill. So it's an easy grab mine. The good margin of safety, buying at 0.888x times 1.7 billion of paid in capital, and less than 6 times 2023 EBITDA. So lots of high margin opportunities to expand and become a full life cycle player in climate change / electrification, mine, manufacture, recycle. Okay, so I guess they're recycling big, so that's good. So qualitative electrification, climate change technologies are here to stay because of government regulation push and consumer demand pull. The standard configuration of all electrification processes across the market, electric vehicles, wind, drones, etc., is a combo of batteries plus electric motors. So what he's getting at is, I guess, okay, so there is that, and this, some of the stuff that they do mine is used and is a definite component that is needed for electric vehicles, wind turbines, and drones, and all sorts of little things like that. Electric batteries and electric motors. So maybe there's some cobalt in there too for lithium motors and lithium batteries. Battery technology is diverse, hard to pick a winner, and battery chemistries are changing rapidly. Electric motors consistent, don't change much. Permanent magnets, and the magnets are the critical component of electric motors. Rare earths are needed to make these permanent magnets. Sustainability is low because of the physical properties of rare earth metals. In this way, rare earth permanent magnets are similar to Intel during the PC boom in the 1980s and 1990s. True, lots of players in the software by Intel was the monopoly provider of the common input by using their x86 chips. That's very true. He's comparing it, so he's trying to get that crowd too. He's trying to get Silicon Valley with that, is what he's trying to sell with that statement there. Okay. He's comparing it to the 80s and 90s boom with x86 Intel monopoly had, which is very true. That's why I like rare earth metals, because they're running out. That's a depreciative thing. It's getting used up. Once they're gone, they're gone. So the price of metals, rare earth metals, are always going to be going up. 80% of permanent magnets come from China. They create a monopoly provider in the Western Hemisphere, about 20% of the world's supply. So that's incredible. They can create an end-to-end solution. One is mining based in California, green sustainable. 2 is making the magnets either alone or through a joint venture. Stage 3 is recycling. I'm going to put a link to this if you want to look this over, but just basically everything we're kind of rehashing here. One other question that I keep getting asked is about, actually before we get to that, tomorrow I am looking at possibly getting into JAMF Holding Corp. It launches tomorrow. It's a new IPO. It's massive, and these guys make some apps and are middlemen for apps for Apple. They help with, you can look it up, but I mean, there's all sorts of weird side plays and middleman plays they have for apps, but it's a huge market share they own. There's actually quite a few videos out there if you want to look them up. If you want more information on that, This is launching tomorrow. I want to pick some of this up. I'm not an Apple guy myself. I never have been a fan of Apple. I never will be. But if there's money to be made, let's go for it, right? You know, someone that holds and is involved with about 20% of Apple's apps, and they're making like billions of dollars a year, and they're just launching tomorrow. Yeah, give me a piece of it. So this is one of those ones. If I can get in low tomorrow, I'm probably going to grab some. Also, again, the golden unicorn, PSTH, is supposedly officially tomorrow. Should be released. We'll find out. I'm not going to believe it anymore until it's finally out, but still going to watch it first thing tomorrow morning. Again, probably not going to happen pre-market, because on these new ones that you usually can't get them pre-market. You just got to wait till the ding ding ding. Okay. Now, OPES, this is what I keep asking about. You know, people keep asking me about this. So I brought it up a little bit, but I just wanted to show a couple things. First of all, I'm going to leave you a link with the actual real BurgerFi financials. Yeah, this is very interesting. It is a ton of information. I could have gone over this for a week until I picked this apart. But I just kept telling myself, dude, just forget it. You got enough. Just move on. You know, there's more important things for us to be doing. All right. So BurgerFi, the reason, if I don't bring up, if something is getting hyped big in the community and I'm not bringing it up, there's a reason. Okay. I might not know about it. You know, there might be something I just am not paying attention to. So yeah, still let me know. But chances are, if it's something massive I'm not bringing up, there's a reason. Okay. And the number one reason is going to be told in my video, how to make money on the red days. Okay. And how to make money on the red days. You should watch that. If you haven't watched that, go watch that and then come back and then finish watching this. But you'll understand why I don't bring up super already completely hyped out video, SPACs and stocks that have been hyping for months and months and months. I usually don't bring them up anymore. Go watch that video and you'll see why. Okay, BurgerFi. First thing out the gate, I don't like the company right now. Okay, I'm all for good burgers. I like what they do, but it is a brick and mortar restaurant. Absolutely terrible place to have money right now. If you were to ask any big money guy right now, hey, you want to invest in a new restaurant? If it was 6 months ago, he'd probably be like, I'm interested. Yeah, what do you got going on? If you walk into any financial advisor, any big business player, any big retail guy, any REIT guy, and you ask them about retail restaurant right now, they're gonna laugh and they're gonna say, why? What is for sale at a discount? Maybe, you know, like, man, maybe we can pick up Taco Bell for 5 cents on the dollar, maybe, but still, But if you brought up brick and mortar restaurants right now, it is a no. They are bleeding and hemorrhaging severely right now. Okay, it is not a good place to be. So I don't like putting money into places that, if I had to, I don't want to be stuck holding bags of a company that I know is gonna be toast or could be toast or is in a super bad, sketchy spot. Okay. So BurgerFi, I like the company. It's not where I want to put my money right now. All right. They did something cool when this whole thing started happening. They did start doing pop-up kitchens in Miami, which was awesome and a good clutch on the CEO. He sidestepped and said, okay, how do we still try to make some money during this? That's fantastic. But guess what? That is not going to fix what is going on. Okay. That probably helped a little bit. You know, every buck helped, but that's not going to come close to saving. Okay, a lot of the franchises are probably going under. Most of them stopped paying their rent on their retail leased places of business. Okay, it's only a matter of time before a lot of the franchises and the residual income they have from the royalty of 5% they are getting from their franchisees just stops coming in. Okay, and then these guys are going to be left bag holding tons and tons of burgers and refrigerators and all sorts of stuff. All right. First 4 months of 2020. And the other reason I'm bringing this up is because almost everywhere you look on any sort of forum or website where people can communicate and get their opinion, 99% of everything I see is insanely positive, and they're just blatant lies left and right. Okay. People keep talking about how they'll make statements like monthly, or even they'll give weekly statements and say, week by week, the finances are still going crazy high, and they are breaking records right now for. They'll say stuff like they're breaking records for restaurants right now, and they're doing absolutely amazing. Even with their track record, these guys are not slowing down whatsoever. Their numbers are just going through the roof. And then if you ask them, where's the proof of that? They disappear. Okay, why do they disappear? Or why do they maybe I've heard of people getting banned from sites or kicked out or downvoted down to eternity. But the only ones that are staying high are the ones that are pumping it. Why do you think that is? Okay. Because it's not true. All right? It's fake. If they can't show you the proof, it's not good. Okay? So guess what? The first 4 months of 2020, they are down roughly 21%, which only included about a month and a half of this thing that happened around March. Okay? So the next 4 months should be really bad. If they went down 20%, 21% with only a month and a half of 4 months total, and they went down 21% just from that, from about 40% of the days being down, it's not good. Many massive corporate restaurants stopped paying rent in March, and they still haven't been paid rent yet. Why do you think that is? What makes you think these guys are all paying their rent? All their franchisees that are supposedly going to be bringing them checks. Last year, FI opened 15 new restaurants, but they lost 7. Okay, is that positive growth? Yeah, barely. Okay, that's almost 50. That's like 55% positive growth. That's not healthy by any means. New businesses, new franchises. You see some crazy numbers juggling around. So I'm not going to beat them up too much on their exact numbers, but I just want to let you know that anyone who's telling you that all the numbers are perfect and year over year everything is looking totally gravy, they're lying unless they can back it up. Okay, am I going to back it up? Yeah. Okay. This is straight from BurgerFi. Okay. Stores opened during the year 2019, 15. Store closings during the year 17. Okay. Now, are they steadily increasing? Yeah. 2017, 101 stores. 2018, 109. 2019, 117. That's fine. Okay. But, it's not perfect though. Okay. They lost almost half their stores last year that also opened. So they opened 2 steps up, 1 step back, 2 steps up, 1 step back. Okay. Let's see if we can see this. There we go. All right. So here is a balance and end period. Okay. From 2017, they had $4.1 million. 2018, they had $3.9 million. 2019, they had $3.5 million. Is that increasing year over year? No. That's decreasing for the past 3 years. Now remember, this is not even including 2020 and what's going on, okay? If I had to put a number on what brick and mortar restaurants have decreased, fast food, I'd say maybe about 30% plus, okay? Real sit-down restaurants, 60%, 70% down, 80%. Yeah, that's huge. It's not good. Fast food, these guys got to be flipping burgers fast. And if they're not, it's not good. They've got to keep those numbers flying high, all right? Now, let's look at another one here. Gross sales for the first 4 months of 2020 compared to 2019 for 15 affiliated owned restaurants. The first 4 months of our January 1st through April 30th, 2020. And then over here on the table, we've got 2019. All right. Let's go with the median number here. Let's actually go with the average, okay? So in 2020, the average gross sales were $509,000, okay? For the first 4 months of this year, Yeah, first 4 months we had about 500,000. First 4 months last year in 2019 were 652,000. So 652,000 last year, 500,000 this year. Is that increasing year over year? What month up? No. In fact, that is where I got my number up above. The number is actually 21.86% down, negative. Okay? So we got to know our numbers. Now, if you bring that down to 77 franchise-owned restaurants, the numbers are even worse. It's actually down 22%. And again, remember, this is only with a month and a half out of the 4 months, roughly, from the thing going on. Okay, so imagine what it's going to be when the next 4 months comes out. You know, from January, February, March, April, May 1st, you know, on. Think it's going to be even worse than that? Probably, right? We got one more to take a look at here. Total revenues. Okay. Any way you cut this, the money is going down. Yeah, 2017, or wait, what is this? Total revenues. This is actually going up. Okay. Operating expenses, net income. Okay, sorry. The revenues were going up, but then the operating expenses, advertising. Okay. So members equity, let's look at net income attributable to controlling interest, okay? So 2017 they had 3,082,000. 2018 they had 29,72. Last year they had 28,55. And again, this is not including what happened this year. Do you think this number is going to keep going down? Yeah. All right. And again, I don't want to beat these guys up too much. All right. I mean, they're still newish. They're just getting, released and all that. I like what they're doing. They actually have good meat that has no hormones in it. I like the company. I think the logo and the coloring, I don't like it whatsoever. I think it's pretty bad, terrible almost. The name, but regardless, they're doing kind of okay, but no one can control what has happened, okay, in the United States and around the world in the past, what's it been, 4 months now? No one can have no one can take it personal with their business like this for things going. There's sometimes you can only do so much, is what I'm getting at. They cannot control the fact that they now have to have more workers, and they're going to be lowering their numbers because of how much they have to distance now, and all the practices, even just sanitizer alone. The cost of sanitizer alone in a day is probably going to be $150, in a restaurant. $150 doesn't sound like much, but times 30, do it by year, take it off your measly 5% you're making on these franchises, that adds up a lot. Okay, it adds up fast. There's companies out there that exist solely to shave fractions of percent off for people for their beans or hand sanitizer or napkins. They're trying to get just a quarter of a penny shaved down, because if they can get 4/4 of a penny shaved down, they get 1 penny off. You times that times 3 trillion napkins in a year. That adds up. Okay, this is a numbers game. But I just want to say, just be aware, okay? If people are totally pumping stuff, and I'm not talking about, there's probably a reason. Okay. And again, go watch that video I said, how to make money on the red days. And that's why I try not to talk about companies that are already, it's too risky, right? Right now in this environment, if something's already, a SPAC is already around $50 or 40 or whatever, it's too high, okay? I don't even want to, it's too much risk. I'd rather get in super low, around these $10.50 floors of these, and just kind of hold and wait for the fly up, then get in at sketchy time around $50 to $30 and be like, I like the company so much and I'm emotional about this decision now. Why are you emotional? Because you probably FOMO and you paid too much for it, okay? That's just the reality. You gotta figure out what to do though. So again, sometimes your best thing that you can do is, say you're 20% down on OPES, right? And you're like, dude, dollars 20%. You know, you got to figure out what to do. Okay, you can either pull out and put it into something else that you think is going to go up, or you can just do a long play. This is probably gonna be fine long term, but just wait till these next financials start coming out by the end of the year. Stuff is not going to be pretty for retail. Okay, and I'm just trying to be your friend and not lie to you. Okay. Just pay attention to the macro picture for restaurants. All right. If you have any more questions, put them down in the comments. I appreciate everyone. Thanks again. If you haven't subscribed, please subscribe. And I'm going to keep knocking these videos out. Y'all have a good rest of the night. Bye-bye.